All right, so those of you guys that do not know me, my name is Paul Tausch with Tausch Capital Group. Born and raised here in San Antonio, went to the University of Texas. I have a degree in finance. I have a master's degree in finance and marketing. I've been in the mortgage industry. I was a mortgage broker for several years, for about 10 years. I'm also a licensed real estate professional. I own a brokerage, RE/MAX, Alamo franchise. A little bit about my background besides the educational side of it is that I've always kind of been an entrepreneur. I worked for our family as well for many years. And in 2011, our company was positioned to be bought out by a larger conglomerate. And so we sold the company in 2011 and we had excess holdings. And so we were looking for alternative forms of investment. And so like this gentleman does in the public sector, it's very difficult to get certain types of returns. So you have to look at alternative forms. And if that's a select group of individuals that have this accessibility to these type of investments. And so we kind of searched the industry. We talked to many industry professionals and what's the average return at times, depending on what the market is, it can be as a -% and it can be double-digit returns. And so we didn't want so much volatility. We didn't want to have so much turmoil within the market like what we're having now. So we were looking for alternative forms. We started doing developments in real estate and in traditional real estate type of vehicles. And so when the market crashed in 2007, we did some things that we learned from in 2007 that we would never do again. And one of them is extreme leverage. You guys understand when you buy a house and a mortgage, you leverage that home and you have debt associated with that. And of course, you've got to have income to qualify to pay for that debt. And so we got caught in that in 2007, unfortunately. And we said, we're going to do things differently. It took us a couple of years to dig out of that hole. And so we do something a little different. So we're in the private real estate equity market. Our investments, let's see if I can get this to go. There you go. This is kind of who we are. Again, we're a private equity firm. We're registered with the Security Exchange Commission under what's called Regulation D, which Regulation D is for accredited investors. Josh had mentioned that. Accredited investor is somebody that has over $200,000 in income and has $1 million in assets, combined assets to invest. And we focus on alternative forms of assets. Again, all real estate related. What we found in 2007, when you're highly leveraged, at times, if you don't have additional cash flow to cover that, what happens? You look like within real estate mortgage, our industry, you see foreclosures. And so we were caught in that particular market at the time, the downturn, as well as we had other stock investments. And so we decided to focus on pure real estate, on non-leveraged investments. And so what we're doing is when we sold our company in 2011, we took those assets and we invested based on non-leverage. And so we invested in residential real estate, single-family homes, multifamily, and small commercial real estate. And so again, this is kind of a niche market. There's not many companies that do it. It has grown. Josh knows now the private equity market has actually exploded. But when we first got into it, there was just a select few individual companies that were providing these things. So we provide exceptional experience for our investors by seeking above average returns. Again, this is not for everybody. These are for sophisticated, accredited investors, for somebody looking for alternative forms to complement their portfolio. So again, we're looking at core real estate related activities where we're not leveraging those assets. And so what we do, we're licensed in real estate. We're also licensed with the Security Exchange Commission under Regulation D. So we're professional with advisors like Josh and other people within our network. And we buy and sell and lend. We're also a hard money lender, private lender on mortgages in the equity space. Okay, so we invest only, again, in real estate and real estate related assets. So that can include real estate developments. It could include buy, sell, flip. Again, we lend in different types of select bridge loans that we do for related assets. So we help, again, accredited investors, and that's the key here. You have to be sophisticated. This isn't for the average Joe. This is somebody that can read some documents, get with their financial advisors, and review the information and see if this is a complement to your portfolio. And that's the main thing. So again, these are non-traditional vehicles of investments. So kind of our core values, we strive to protect and preserve. And that's the biggest thing, especially right now with the down market. Josh is down how much?
We're up.
We're up 14%. So we maintain 14% roughly plus or minus. Doesn't matter what the market does. All of our assets, again, are fixed assets, invest in real estate, core related real estate that we get a fixed rate of return on for us individually. Now, our investors, it's a little different. If you're a passive investor, you're going to get what's called a preferred rate of return. So again, that's still, just depending on what the market is at the time, it's still an aggressive return that you would get. So we try to maintain transparency with every transaction. Everything that we do, we keep a file on, we go through a title company, we close. All real estate related activities are done through our office. Again, it's a small company. We're a small private equity fund. So we handle everything internally. We have our hands on everything. A lot of these big firms, like what Josh deals with, you've got multiple people, you've got multiple players and managers, and a lot of these people don't understand private equity. It can be very dangerous, but if you structure private equity the correct way and you back it with assets, real estate, it can be very lucrative. And again, that's part of how we share in that process. So when you invest in our company, we also invest in you. So let's just say you have a dollar amount that you invest in, you're a accredited investor. We source the investments and we pool our monies together and we invest as one unit. So you're just not investing your money, we're also investing our money as well. So we have a vested interest into this particular asset class. Okay, so again, one of the main things you heard me say was we don't leverage. So we're not taking the funds and leveraging those funds to increase shareholder returns or investor returns. And that's something that we're not going to get those double-digit returns all the time as an individual accredited investor because there's more risk associated with that. Yes, us as a firm, we get the double digits, but our accredited investors may get a lesser percent, but there's less risk involved with it. So that's one of the main things. And then we value our investors, again, by providing these above average returns. You know, look at your portfolio right now. If you have a 401k, if you have stocks, bonds, mutual funds, take a look at what it's doing. You know, is this something that could complement your portfolio for the long term? Again, this has to complement what you do. You have to talk to your financial advisor to see if there's a fit for this. So kind of a mission statement for us is to provide our investors with a stable stream of income. This is not for everybody. This is if you want a stable stream of income over time. You're not getting appreciation in the market. You're just getting a steady rate of return. So it's just like kind of like a CD. When you have money and you invest and you put it into a CD, it's a fixed rate of return for a fixed time period. So that's kind of what you have to look at, you know. And again, the biggest thing is preserving your capital, protecting that, because in 2007 we had some losses. There's some things that we did that we learned from, and the main thing is to protect your capital and the preservation of that. So anyway, that is it kind of in a nutshell, not as extensive as Josh. Thank you. If you guys have any questions, appreciate it.